Everyone was watching NVDA this week. The Thursday flush, the Friday bounce, the whole "is the AI trade dead" narrative. And while all eyes were on NVDA, META quietly pulled off one of the cleanest breakouts I've seen in months. If you're new around here, hit subscribe. I put out a free watch list every week. Links in the description. No paywall, just the list. Let's start with the one everyone was watching. Thursday, NVIDIA got rocked. The hourly chart doesn't lie. Price spiked all the way down to $189 and changed in what looked like a full-on breakdown. That's below the $197 long-term trend everyone was watching on the daily. And then, buyers showed up. Hard. By Friday's close, NVDA was sitting at $211, up 4% on the day, 148 million shares traded. That is a volume bar that demands respect. Here's what the daily tells you. Friday's candle is a textbook recovery marubozu. Opens near the low, closes near the high, no upper wick to speak of. It reclaimed the midterm trend at $206, which is the first real technical win in 2 weeks. But look at the hourly, and you see the real story. Price has poked above the upper channel around $209, but the moving averages are still untangling themselves from that flush. The short-term trend is still sandwiched between the midterm and long-term. They haven't lined up bullish yet. That means this is a bounce that needs to prove itself, not a confirmed new uptrend. The upper channel resistance on the daily sits at $219. That's the next test. And the all-time high is $236. Momentum is real, but chasing a stock that just rallied $22 in 2 sessions with unaligned MAs, that's how you buy the top. Now the one people missed. Meta. This stock has been in a brutal downtrend from $744. For weeks it looked dead, grinding lower, failing every rally, hitting $520 in April. Then something changed. It started basing, building a floor. And on Friday, it ripped nearly 6% to $669 on 40 million shares. That's double the average volume. It didn't just bounce, it smashed through the upper channel at $663 on the daily and just kept going. The hourly is where it gets interesting. From $590 to $677 in a single session. That's not a bounce, that's a breakout with conviction. The volume bar on that move is the tallest green bar on the entire chart. But here's the catch. Price is now sitting nearly $40 above every major moving average on the hourly. The short-term trend is at $628 and climbing fast, but price is at $669. That's what overextended looks like. After hitting $677, it pulled back to the $663 to $670 zone on lighter volume. Healthy digestion so far, not distribution. Breakouts like this often backtest the breakout zone. The $628 to $663 area is where I want to see Meta hold if this is real. So here's your week ahead plan. 2 stocks, 2 setups, no fluff. Trade 1, NVDA. I'm not chasing $211. If you got in near that $197 to $200 zone, congratulations. Start tightening stops. A move back above $219 on volume is where I'd consider adding "not up here." If it pulls back and holds the upper channel turn support around $206 to $209, that's a higher probability entry. If it loses $206, this bounce was just a bear market rally and you want out. Trade 2, Meta. This is the more interesting setup, but timing is everything. I'm not buying $669 after an $87 single session rip. I want to see it digest. If it pulls back to that $628 to $640 zone where the short-term trend is rising into, that's where the risk-reward makes sense. A backtest of the breakout level around $663 and a hold is also a valid entry, just smaller size. If it rips straight to $700 plus without pausing, let it go. Chasing breakouts that are $40 above their MAs is a rookie move. And if it fails back below $600, the breakout was fake. The broader tape matters too. SKHY starts trading Monday. That's the IPO everyone's been waiting for. And sell the news risk is real. CPI drops Tuesday and the Fed's already talking tough on inflation. Bank earnings all week. And the Iran situation. Oil closed down on the day the ceasefire ended. That tells you how complacent things are. The VIX is still above 16 on a week where the Nasdaq made new highs. Something doesn't add up. Semiconductors and AI can absolutely run higher from here and test those all-time highs. The momentum is real, but the higher they go without a pullback, the more you should be protecting gains, not adding size. Don't be the person who buys NVDA at $215 because FOMO finally kicked in. Free watch list is in the description. It's got the exact levels I'm watching for both NVDA and META, plus a few bonus names on my radar for this CPI week. See you next time.